In this video, traders are going to look at, was this the biggest short squeeze of all time? Stay tuned. Hey guys, warm welcome to So this may well be the biggest short squeeze of all time. This was Volkswagen and Porsche. I'm going to run through exactly what happened, why the shorts got stuck, why this potentially could be the biggest short squeeze of all time. Now, in terms of price, I know there are other short squeezes out there from smaller stocks. Like recently we've had cannabis stocks just going crazy, we have biotechs going crazy. The amount of people stuck short on that are very, very low, very, very small. In order of magnitude of damage in terms of monetary amount, this probably ranks up with the best of them, if not the highest. So let's look at exactly what happened. So in March of 2008, this is how the whole thing sat. Volkswagen shares were chugging along trading very happily. Porsche owned 31% of Volkswagen and Lower Saxony owned 20% of Volkswagen. And for whatever reason, Porsche had said, hey, publicly, we don't intend to purchase 75% of Volkswagen. They wanted to take over Volkswagen, but they publicly said, I'm not going to do it because they thought that getting those shares off Lower Saxony would be too tricky. However, now we fast forward through to October of 2008, and this is what happened. Porsche suddenly announced that they'd increased their stake, their shareholding, from 31% to 43%, plus they also had 31% in options. So that will be a call option. They've bought call options, so it gives them the right, but not the obligation to purchase shares at a specific price at a specific point in time in future. Pretty clever, because if you can't buy the shares, you can buy the options and you can exercise those options on expiry. Yes, it might be some difference in the time, the price that you can buy them, etc. You might have made money in the options, you might have lost money in the options. That doesn't mean just because your options lost money, you don't have to. You don't have to exercise it. You can still exercise it. So maybe that's an easy way for you to acquire shares, a large amount of shares. That might be a good way. So all of a sudden, Porsche now owns 74%, just under that 75 they said they weren't going to go to. 74% of the shares in issue. Now, that's fine, but then when you start adding in the short traders exposure into the mix and you start doing some sums, then short sellers started to get a little bit concerned. 13% of the float was net short. So we had a situation where 74% of the stock was potentially owned by Porsche, 13% of the stock was held short, and 20% of the stock was owned by Lower Saxony. Added to the fact that 6% was also in an index fund, forget about that for now, this 74 plus the 13 plus the 20 is 107%. Now, bearing in mind, this is where it gets interesting, is that Porsche certainly aren't going to sell the shares. You know that they're accumulating the shares because they want to accumulate more. They've got no incentive whatsoever to sell the shares. That's like against the whole point of what they're doing. So that's not going to be available for the short sellers to buy, because don't forget, for a short seller to cover, they have to buy shares from somebody. They have to buy, so some shareholder has to sell them those shares. Then you've got the 20% in Lower Saxony. They're certainly not going to sell the shares. And you've got the 13% obviously who are short who need to cover. Oh dear, and there's 6% in the index fund. Now they might do, but they're an index fund. They're tracking the index. They're not going to be doing it on a short-term basis. So all of a sudden, you've got nobody to sell you those shares. And actually, because the number's 107%, oh dear, you might not even be able to buy back the shares. So not only is it massively restricted, but there might not be enough shares for you to buy back. Oh dear, what do you do? And this is when we had an oh dear moment by the short sellers. The stock went from 200 to 1,000. Check out the chart, I'll put it here now. What a face ripper, absolutely rocketed up. You can see it came down again quickly. It became clear, I mean, Porsche said, listen, we're not trying to corner the market here. We just want to buy out Volkswagen. That's our whole objective here. So it wasn't an intentional short squeeze. Now, I don't doubt for a second that when sharks smelt the blood, they said 30% net short, how many shares is that? How much is that? They are going to push and squeeze this thing high. I'm sure a lot of people made a lot of money on that deal, as did a lot of people lose money. Wealth transferred in that kind of way. There was bailouts. People got caught on it. People probably had to cover at highs or margin calls. People were worried. It's just a mess, especially for a big stock like this. Happens regularly in these small cap stocks like your biotechs and stuff that are just getting chugging. People are going to be short. 20, 50,000 shares and they're going to get hammered and it wipes them out. That's not necessarily normal occurrence, but that happens more regularly. But when you're talking about a big stock like this, that kind of have this perfect storm of, oh dear, Porsche's now got 74%, Lower Saxony's not going to sell any, Porsche definitely isn't, the index fund is in no position to, and you can't cover your short, all of a sudden you're looking at a catastrophic unlimited loss. So that could be the biggest short squeeze of all time. If you can think of another, stick it in the comment section below and we'll cover it in another video. Take care. Bye-bye.